Hello, hello, good evening. I'm back from Hawaii and I'm coming to you live this evening with a very special guest, my wonderful friend, the money coach, Freya Savage. Here she is. I'm going to bring her on. Just going to wait for the little... I've just been eating chocolate, so hopefully there's none left around my mouth. Let me see how to invite you to join. Here we go. Here she comes. Freya is joining us live from... Hi, Freya. You're in Bali, right?
Hello. Yes, I am.
Good
Nice to
morning.
see you. Good
So nice to see
morning.
you. Did you go
You
surfing this
too.
morning?
I didn't, but I did have a look at it and it looks good. So I'm going to go out in a few hours.
Amazing. Well, thank you
Yeah.
so much for joining us. So I've known Freya for a while. We met in a coaching program and sort of built our companies side by side to like multiple figure months. And then I was like, cool. So I've got the earning money piece down. What do I do with it once it's here? And I knew Freya was my lady, and I just joined her Invest Like a Queen program and her School of Money program. And I love, love, love the way that she works and everything that she teaches. She combines money mindset with like really simple, like no bullshit strategies for organizing and building your money and investing. And I'm just like so grateful that I found you, because it's a field that can seem very overwhelming and there's so much conflicting knowledge out there, and we need to be talking about this more as women, because women tend to not be investing as much as men. So I'm super excited to have you on and to be diving into this conversation. Is there anything else that you want to add to your intro, by Freya?
Only that. I'm back in a moment. I just want to connect to Wi-Fi.
So yeah, and money management. We're talking about money management for hot messes. So as somebody who has gone from very broke and an absolute hot mess when it comes to money management to somebody who's figured out how to be
Okay.
making money, and figuring out what the hell to do with it, how to organize it, how to care for and tend to my money. It's been such a big journey for me. So I'm really excited to talk more on this topic and to share Freya's nuggets of wisdom on how to take care of your money so that you can grow it and have loads of it.
Yeah, cool. I just connected to Wi-Fi, so I was gone for a second there.
Amazing.
Thanks for the intro. What an intro. You're the queen of introduction. It's great because I don't even know what I do. And then when I when I go on a podcast or when I speak with somebody and they're introducing me, I listen very carefully. I'm like, great, now I can use something for my byline because they're defining what I do and I don't even fucking know what I do.
I know, that's what I like. Whenever my people come on my podcast, I'm like, your bonus is getting like a mini bio from me, because I'll like edit their
Yes.
bios and like add little things when I introduce them. um cool, so let's dive in. Like, what is it, what's like the main message on your heart that you see coming up with the women that you're working with over and over again? Like, what are some of like the biggest misconceptions or mistakes that you see people struggling with that don't need to be a struggle?
Yeah, totally. So there's two parts that are equally as important as each other. And, the mindset part, which is so fucking important. I worked in finance for 10 years. I studied finance. I was deep in the investment world, in the strategy world, and I earned pretty good money, but I felt so poor. And it wouldn't matter how much money I had earned or how much money I had, I would still feel that way. And what is the point in being financially rich if you don't feel rich? Like, what is the point of that? And then on the other spectrum is if you don't know how to call in money, if you don't know how to open the doors for money, then you can have the best strategy in place. You can have a great investment strategy. You can have a great cash flow system. But if you don't have anything coming in to feed it, it's pointless. So you need that part of it. Firstly, for your own, to alleviate your own suffering, you know, to enjoy life so you can actually enjoy the money you spend. Secondly, to know how to call money in. And, you know, one of where we met with Melaine through Melaine Lee, she said something that I will never forget. And she said that I use this all the time. I've kind of taken it. She says, your problem is not that you spend too much, it's that you don't earn enough. And this blew my mind. You know, I only thought that you could earn money from working. And I had no idea that money could come in different ways, and that you didn't need to trade time for money. So this is probably, you know, quite simplistic. I assume most people who are listening to this, you know, they already know these things, but I have to remind myself of this stuff every day. You know, it's the simple things that I forget. And then the second part of it is around the practical money management side. And, you know, what I see, the biggest mistake I see people doing is they get really emotional about it. They have this fear of missing out, and they take action very quickly without it coming from their own center and without it coming from an educated place. So you can see right now what's happening. You know, people are getting interested in investing, which is amazing, because I think investing is imperative. If you want to be wealthy, you have to invest, because that is the only way you're going to be able to get a passive income. Yes, a business can also be a passive income, but you generally still have to work on it. But if you invest in assets that produce income, that is how you have space and freedom to no longer have to work for money. This is like the most, you know, I worked with very wealthy families, and all of them invested. And you need to do this. If you want to be wealthy, if you want to live a wealthy life, you need to do it. And you need to start now, because you need to have time on your side for it to work. It doesn't work 1 year, 2 years, 3 years, 4 years, 5 years. This is something you do forever. Investing is forever. So what I see people doing right now is, it's great that they're getting interested in investing. But the problem is they see it as very shiny, as get rich quick. You know, people have made a lot of money at the moment in things like crypto, even in speculative companies, you know, companies that are popular, like Tesla. The thing with these is they're so speculative, and it's so short term. And this is not how you build long-term wealth. What is happening right now is unsophisticated investors are going into the market. It's very accessible now for people to invest. 5 years ago, it was not this easy. Now it's pretty low cost. It's pretty simple. You don't need to go through a broker. Everybody can invest. But what is happening is people are not understanding the basic fundamentals of investment, and they're seeing stories, you know, 24-year-old life coaches saying how they made $100,000 investing in crypto, or their personal trainer is telling them they should invest in crypto, or, you know, their friend who works as a tantra teacher is saying, oh, you should invest in this stock. Like, it's crazy. And really, like, unsophisticated, uneducated people are giving financial advice and suggestions. One of my girlfriends, she's doing a course taught by somebody who's never studied finance, never worked in finance, and he's teaching her how to make money in crypto. And, you know, red flags, like huge red flags. If your tantra teacher is investing in something, this is a good sign not to do it. You know, this is a good sign that it's already gone. It is so overvalued. It actually has no inherent value. And you don't need to invest like this. It gets to be very simple. You get to use mathematics, use averages, use the system, use ways that work. And this means being disciplined. It means, you know, taking the time to learn from people who've actually been in the industry for a long time. I have not been in the industry for a long time. I've only been in the industry for 10 years. So what I teach it's not my own stuff. I didn't make this stuff up. What I teach is philosophies from the investment greats. Like, you might have heard of Warren Buffett before. He's like 120 if you've seen him. He's so old. But he's been around, you know, he's been around the block, and he is super switched on, super intelligent. And you know, there are these investment greats, and they know this stuff. And yes, they might seem like old, you know, old grandpas, and the new people, the new kids on the block are like, you don't know shit about shit. You know, you don't know shit about where the world's going or technology. Look how old you are. These guys know. They know. And the person who knows the most in this space is the one who also knows that they don't know. Because we don't have a crystal ball. I have no idea what the world will be like in 10 years. But I tell you what I do know. I do know that these big companies, these enterprises, they're going to be leading the way. And I have no idea what kind of currency we're going to be using in 10 years. No idea. But I can also tell you that this is not the most sophisticated coin or currency. There are much greater enterprises out there with much higher, much more innovative research and development. So this is paving the way for sure, but I have no idea how it's going to turn out. And why bet on something so speculative? If you want to, sure, 5-10% of your assets for fun. Be prepared to lose it all, because you probably will. But with the rest of it, you invest consistently in a way that works, in companies that are tangible, that actually that are producing a profit, that have income because they're selling something. Right now, these, like any crypto, it has no tangible value. It's only based on what someone else is going to pay for it. It doesn't produce an income. Gold is the same. It doesn't produce an income, but at least gold has some kind of tangible value behind it. So be very, very careful. You know, what I'm seeing now is I'm saying be cautious, be careful. Take action, but take it from a place not of fear of missing out. You know, take it from an educated place. One of my favorite, have you done Invest Like a Queen yet, Sarah?
I'm doing it now.
Okay,
Yeah,
cool.
I just started.
So great. So one of the most incredible investment forces is the power of compound interest. And what compound interest is you get, let's say you own a company, you own Google. And by the way, this is very easy to do, and I wouldn't suggest doing active investing either. You can do this very simply. It's called passive investing, but I don't have time to go into all of this. But let's say you own a company. That company makes a profit because they're actually selling something. That you are a shareholder, you are an owner in that company because you own part of it. That's what happens when you buy a share, you become an owner. Because you are now an owner, that company distributes part of the profit to you in income. You get cash in your bank account by owning these companies. They also grow in value as well. So some of them pay more income, and some of them are more weighted to growth, right? So if you look at like a resource company, they're very heavy. It's very heavy investment for them to frack into oil, and you can also invest ethically as well. So that's also possible. But I just want to use this as an example. But let's say a resource company, this would be more growth. And it's not going to pay so much income because they reinvest their profits, because it takes a lot of money for them to produce what they're producing, right? So some are more income, some are more growth. But this income that's distributed to you, you can then reinvest that. So then you buy more companies, of this company, of other companies, whatever. And then the next year, that income that you've reinvested, that then produces more income because you now own more shares, more portions of the company. So then they pay you more of the profit. And then the next year, that income then accumulates, and then you get paid even more. So what happens is you invest, let's say this much, and here's the graph, right? If you invest consistently, and I only have one hand because the other one's hand is holding the phone. And what compound interest does is over time, you invest this much, but your value of your portfolio goes like this, because the interest compounds on each other. So $50 a week. Actually, the equation that I did the other day, because it's still in my head, if you invest $40 a week in a boring, in the market, in boring companies, you know, you're not taking huge speculations, you invest it consistently, so $40 a week consistently, over 40 years, you will have over $2 million. You have only invested $100,000. Maybe it's $200,000. Anyway, I think it's 200. You've invested almost $200,000 over 40 years, and your portfolio has accumulated to over $2 million. The rest is compound interest. That 1.8 million, that's all compound interest. You didn't do shit for that. I mean, you did because you had an investment philosophy and you stuck to it and you invested consistently and you invested forever. You're not like, you know, a small, you know, teenage boy getting excited about every girl that walks past. You have like, you're like solid in yourself, you know, you don't listen to the people around you who know nothing about finance. You're consistent. And importantly, you have enough cash that you never sell your investments. You never have, when you have your back up against the wall, you don't sell your investments, because this is also what people do. They invest and then they look at their profit every week, every month, every 6 months, every year. And then maybe they sell because they think, oh, you know, it's not doing well, and they sell it. Market cycles are like this. No idea what the market's going to do next year. I have no idea, especially with COVID. The economy, I have no idea where the economy is going. It depends what happens with the vaccine and all of this stuff. But it's irrelevant. When you invest for forever, it's irrelevant because you use averages. And we know every 7 to 10 years, maybe the cycles are longer, because they do get longer, there will be crashes and there will be peaks. And this is how it works. But I know that on average, you get 9.8% return per annum. Sometimes this year it's been like 42% return in the market. You know, there are other years where it's, you know, the GFC was, you know, 50%, negative 50%. You lost half of your value. So you have to be educated enough to understand that you don't need to do anything, that this is the way the market works, and not to pull your money out, not to pull it out when the market's up and not to pull it out when the market's down. And you have to understand, you have to have a system in place where your cash flow is sorted and that you have your expenses sorted that you can pay for with cash, so you don't have to go selling your investments because it might be a bad time in the market. And this is the only time you lose money when you invest, is when you sell and you capitalize that loss. That's the only time you lose money.
Mm-hmm. Can you speak a little bit to like what the options are available to be investing ethically in companies that you like actually align with supporting, and kind of avoiding companies that don't align with your values?
Totally. Yeah. So the first thing is to know what your values are, because everybody has a different idea of what ethical means to them, and that's great. That's perfect. There is no right or wrong way. So it depends on your own values. And then the second thing that is important to note is, you know, many people think that if they invest ethically, that they're somehow losing out on returns. And this is just not the case anymore. Because we as the consumers actually hold the power. You know, people think these conglomerates and these enterprises are terrible businesses. We're the ones buying their shit, you know, and we're the ones who are becoming more aware of their practices. So companies that are ethical, you know, ethical is such a loose term, but, you know, socially responsible, also totally loose term. You know, some people might think Facebook is totally off the cards for them. You know, and other people might be fine with it. It just depends. But we generally support these companies. You know, we want to support them more so, especially millennials. You know, we don't just want to buy a product or a service for the outcome. We're also cognizant of that business's practices. So this also means that these companies that are practicing in this way, they generally get more support from us. So this is why they make just as much profit. And actually, sometimes these ethical blends of companies outperform the ones that are just your generic blend of businesses, but they generally get around the same target, around the same over time, over average. So you're not losing out on by investing this way. And how do you do this? Well, you should do my program first, because I don't want to tell anybody how do we this is the other thing. People say, how do I, like, what should I invest in? This question is, of course, a relevant question, and I understand why people ask it. When people ask this, I know that it's coming from a place that they don't really understand investment, because this is not the first question to ask. The first question to ask is, what do you want to achieve? What do you want income down the track? Do you want passive income? In how many years do you want this? Do you want growth? What are your values? Asking yourself these types of questions, and then to understand asset classes, because property might be the way for you. It might be a blend of property and the share market. It might be, actually right now the best thing is to keep your money in cash. Maybe it's your retirement fund is the best place to be putting it. So then to look at what is it that you want to achieve, and then what asset classes and what structures are going to support that. And then you look at what your investment philosophy is, based on educated foundational ways to invest. So you're not shooting from the hip and changing your strategy all the time and listening to your tantra teacher and getting swayed. And so you're solid in that. And then the final piece is, how do I actually do it? And there are many ways to do this. And, buying a simple ETF, if you don't know what that is, I'm not going to go into it right now, but you can buy these. They're essentially it's essentially a bundle of companies that track the index. And you can buy an ethical one where an algorithm just runs over the top and it takes out companies that have been flagged as not being ethical. That's essentially what it is. That's essentially one way to do it. The thing that I would say is, you also need to really be thinking about dollar cost averaging. And I'm using these terms here, and I know that most people have not heard about them. So this is why it is really important to actually understand this stuff. But if you use dollar cost averaging, where you invest consistently over time, then you reduce your risk, because it's no longer relevant whether the market's down or whether the market's up. Because if you're investing weekly, rather than, the price you buy at becomes smooth, rather than taking this risk of, is it a good time? Is it not a good time? So it's also important to consistently invest. So you need to be taking into account transaction costs. If you're investing consistently, how much is this costing me? Because you don't want to be making a $10 trade and investing $20. This makes no sense. You need to be also thinking about this and the kind of platforms that you use as well. So, I went a little deeper than what I wanted to go into that. And I know that a lot of this is kind of overwhelming for people, because we were not taught this stuff. And, and I studied this for 4 years, and I worked in it for 10 years. So I'm saying it like as if it's so simple and it's so easy, but it's taken me a long time to get to this place where I realized how simple it is, because it can be very complicated as well. People can make it very complicated. There's very complicated terms. There's very complicated strategies. And it's just not necessary to do it that way. It's not necessary to do it the complex way.
Yeah, thank you so much for sharing all of this wisdom. I think the key takeaways for people who are like new to investing, wealth building, money management is to keep it simple, to get help and like learn about it. And the way that I see it is like, is like I have my business, you know, particularly as entrepreneurs, like we're multi-passionate people. We have multiple streams of income, multiple projects, multiple avenues that we're building and nurturing. And money is like its own thing. It's almost like its own part-time job. That's kind of the way that made sense to me, is that like, yeah, I'm bringing in money through my business, and that's one thing that I'm consistently nurturing every day. But my money is another, almost like another entity in itself that I'm showing up around, like learning around, you know, organizing, structuring, and figuring it out in exactly the same way that I did when I was building my business, just like one step at a time, like getting help from people that I resonate with, getting lots and lots of support around it, and just looking for the ways that I can start taking action now, in an educated way. Because that's, I think, the other key thing about investing that you teach is that, like, get in there early, like start now, like the earlier you start, the better, and then be consistent. So like start small and then continue to kind of build, because it's that the time
Totally.
factor with the compound
Yeah,
interest that you really like gives you the most advantage above everything. So
totally. Yeah.
like it is,
And
it
you've,
isn't, it doesn't have to be complicated. Take Freya's
mm,
Invest Like a Queen course, and you know, do that for yourself. Like I love how you talk about it as like you're doing it for your future self.
yes, totally. And you've totally nailed it, you know, around speaking about money in this way, and that it's like your business. You know, when you have a business, you have automation set up in the background. Like even though I'm all for flow and not having structure and, you know, all about being an artist, but actually I still have automations in the background that give me the space to do that. And it's the same with money, you know, and this is how, you know, this idea of this hot mess, yeah, I fucking love that. I love, you know, just like being kind of chaotic, and I know that I have the frame in the background holding that. You know, in my business, I know that I have the frame holding that. I've got a PA, she kind of holds everything together for me. But with my money systems, I have it all automated. And this is so important, you know, to have it automated, because it's not going to work if you're manually doing these things. Like it's, you're not going to be able to be consistent over time. It's just not going to happen. So to have these automations set up, you know, with your cash flow, with your different investments, understanding the different structures, how they benefit you. You know, you're, like I said, the retirement, you should be having something for retirement, which should be separate for your personal, your personal wealth accumulation. If you want to have children, you know, to be thinking about a pool of money for that, because that costs money. So to have, you know, these ideas, a vision, and to have very flexible setups in the background that are going to support that. And if your vision changes, great, fine, use that money for something else, you know, fantastic, but it's there to support you, to support your future self, rather than you get to that place and you're like, fuck, how am I going to afford this? You know, 70% of people cannot afford retirement. And this is in the Western, this is in the US and Australia. And so that means they have to rely on somebody else. They have to rely on the government, or they have to rely on their partner or somebody else. And I don't want that for people. You know, that's fucking horrible. Government support is super low. You know, it's just above the poverty line. And we get to have more than that. And we're not taking away from anybody else. This is where the money mindset stuff comes in as well, by having more than that. You know, where actually money is an infinite resource. It's just a distribution issue. And if you don't have enough money and enough wealth, that's a programming thing. Because you have if you're watching this, you have the opportunity to access that in an instant.
Yeah, and it took me a lot of work to get to this place where I could even have a conversation around investing, where I was even like ready to invest in a program and like actually be there, you know, just from somebody who never looked at her finances, who was always broke, like always running out of money, always being super resourceful in like every other way. And I had to sit down and do the money mindset work and like weed out the stories, shift the stories that I was telling myself that allowed me to, you know, grow my business to six figures and be hitting multiple five-figure months. And then it's like the next level is, okay, earning all the money and then like what to do with it. Like there's so many layers of dysfunction in our relationship with money,
Mm-hmm.
simply because we're not talking about it. And it does
Yeah.
require work. It requires consistent attention to the stories that we're telling ourselves. And it does get to be simple when you shift those stories and you shift those inner narratives. And it's so important to be doing that, particularly as women who live so much longer than men and, you know, often are out of the workforce longer because we're giving birth to babies and raising them. So it's, you know, investing and knowing your money management is just so important, particularly as who knows how long we're going to live to, right? By the time we're old, maybe we're going to
Who
live to like
knows?
120 or like
150.
200 years
Yeah,
old. Yeah.
right. Right. Who
So,
knows?
so I love that we're having this conversation. Thank you so much for coming on. And
You're so
please, can
welcome.
you tell everybody where they can learn more about what you're up to?
Yeah, for sure. So you can head across if you're watching this on Insta. I think maybe I'll upload this as well myself, but you can head across to my Instagram account, which is Freya_Savage. And I have, you can click on the link and I've got some programs there. Invest Like a Queen is the investment program. Then I have School of Money, which is everything money, including the investment piece and including money mindset. We go into cash flow structure, estate planning, like literally everything I would do as a financial advisor for a high-end client that would come back. Yeah, that would normally, you know, we would do this for $10,000 and then manage it each year for $10,000. But I teach people how to do this themselves and how to create their own roadmap.
Amazing. Thank you, Freya. You're amazing. This conversation was amazing. Have an
You're so
incredible
welcome.
day.
Thank you. You too. Love speaking to you, Sarah.
Thanks for watching, everybody.
Bye.
Bye.